Hi everybody, Terry Ryder from hotspotting.com.au. The topic this evening is regional Queensland. We've actually just published our latest edition of Top 5 Regional Queensland Hotspots, and also recently the Top 5 Brisbane Hotspots, and we make them available on the Hotspotting website as a bundle, getting both reports together at a discounted price. Just coincidentally, I was asked by ABC Radio today to speak to them live on air this afternoon about regional Queensland real estate. They were particularly interested in affordability matters and wanting to find out, firstly, where are the most expensive places in regional Queensland for housing, and then where are the cheapest. So it was an interesting topic, which caused me to do a little bit of research to come up with the answers they were seeking in terms of the pricier end of the market. And they were interested because they were broadcasting to all over Queensland other than Brisbane and the Gold Coast. So they were looking at places outside of that southeast Queensland region. The most expensive places to buy real estate are actually on the Sunshine Coast. Sunshine Beach, for example, has a median house price now of 1.2 million. There's been some price rises on the Sunshine Coast. If you've been following us, you'll know that the Sunshine Coast is a growth market because it's a growth economy with over $20 billion being spent on infrastructure and other projects at the moment. So some of those more expensive markets have risen in price. So Sunshine Beach has a median price above $1 million now. And places like Noosa and Noosaville have median prices up in the mid 900,000s, and some of the beach locations down in the southern part of the Sunshine Coast, like Dickey Beach and Marcus Beach and Shelley Beach, have median prices in the 800,000. The only other place out in the regional Queensland that can challenge those numbers is a very small suburb with a small number of houses in Townsville, Castle Hill. It's mostly the big hill that dominates the backdrop to the city of Townsville. Not very many houses in that market, and only 14 sales in the last 12 months. So the median price might be a little bit misleading, but right now, according to the figures, the median price for Castle Hill and Townsville is $953,000. So those are the most expensive places to buy in Queensland outside of Brisbane, where there's a number of suburbs now with median prices above 1.3 million. The most expensive is New Farm at 1.6 million. And on the Gold Coast, there are a number of suburbs also with $1 million medians. But at the other end of the scale, Queensland is probably the most spectacular market in terms of the big contrasts through thriving places and places that you'd want to avoid, places that are very expensive and places that are very cheap. So out there in regional Queensland, there are another number of towns where the median price is well under $100,000 at the moment, and they're primarily places that previously had a bit of a real estate boom because of the resources sector, and then changes in the resources sector, not just the decline in the mining industry, but also the new trend where they use fly-in, fly-out workforces, and the fly-in, fly-out workers stay at the mine site and accommodation camps rather than buying or renting local accommodation. So we've seen big price decline in some of those markets. The cheapest place I can find in places that are big enough to have a real estate market with a pulse is Dysart in central Queensland, the Isaac region, where the median price right now is $80,000. It's dropped 33%, according to the figures I have, in the last 3 years. But like a lot of the markets that are thusly affected, there's recent signs of a return to growth. We're starting to see an uplift in sales activity in some of these places, and also the first early indications of some rising prices in some cases. Not that I'm suggesting that you rush out and buy in these places. They are volatile and high-risk markets. Moranbah, of course, is perhaps the most famous coal mining town anywhere in Australia because it had such a spectacular rise. At one point, its median house price was over $700,000. Right now, it's $160,000. It shows how much prices have dropped there. But in the last 12 months, the price levels have been stable, and we're starting to see a rise in sales levels again. So that market appears to be coming back, but it's very unlikely to return to those heady heights when the typical house cost over $700,000 and typical rents were $1,200 or $1,500 a week, because the mining industry is no longer putting their staff up in local accommodation, they're putting it up in accommodation camps. Mowra, another central Queensland town, west of Gladstone, has a median house price at the moment of $89,000. And there's various other locations, way out west, places like Cloncurry and Charleville, where median prices are in the sort of 150, 170 type thousand range. A little bit closer to the coast, places where there are bigger population centres, people might choose to live for lifestyle. Towns like, or small cities like Mackay, Bundaberg, Rockhampton, quite good buying at the moment because prices have fallen, partly or largely because of their links with the resources sector and trends in that industry. So in Mackay, typical suburbs now in the mid 200,000s, whereas they were previously 300,000s or some in the 400,000s. Same in Gladstone, the well-known industrial city, which had an industrial economic boom, but not a property boom, because developers went silly and oversupplied that market, and there's been price drops of 30 to 40% in the last 5 years. So the buying there is pretty good, and there are indications that vacancies have dropped quite a lot now, and there's some prospect of that market entering a recovery phase quite soon. So we're also already seeing signs of that in Mackay, Rockhampton, where there are some suburbs with median prices for houses below 200,000, indications of better times ahead for places like Rockhampton. Bundaberg's another suburb with some growth prospects, with typical houses in the below to mid 200,000. So there is good buying, but you do need to be aware of the risk if you're considering such places. Also, not just the risks of economies that tend to be volatile because of their linkages to the resources sector, but also because some of those places have a tendency to flood, and you need to check out the flood maps and you're buying in those places. So Regional Queensland Hotspots report, which we published this week, doesn't focus on some of these super cheap areas so much. It focuses on the areas that we think have got the potential to show good price growth. Places like Townsville, for example, although coincidentally, today there was news of some flooding in Townsville, lots of rain around Queensland recently, but Townsville, generally speaking, is an economy and a property market entering a major recovery phase. Lots of big spending on infrastructure coming up and prices down after some recent decline. The Sunshine Coast, a growth market, and one to watch, and a few other places that we highlight in the top 5 Regional Queensland Hotspots report. It's out now. You can get it on the Hotspotting website, either individually, or you can buy it as a bundle with the top 5 Brisbane report. That's it for now. Terry Ryder from Hotspotting signing off. Talk to you again soon.